What's up, people? How you guys doing? Welcome to another week and another episode of Market Watch. I'm your guy, Erik T. Jackson. That's your other guy,
Erik Chinea, welcome back, y'all.
Eddie Chinea. I used to say Chinea. He says Chinea, so I'm gonna take
Yeah,
it as Chinea.
Chinea, Puerto Rican from Miami, Florida, man.
Already. What's up, my brother?
Everything's good, man. How's your week?
Hey, it was good, man. It was good. Had a basketball game every single night.
Oof.
Yeah, man, I
Being a
was
coach,
tired.
baby.
Yep. But
We're on the Christmas break now, though, man. So that's the other joy of being a teacher and a coach. You know what I mean?
absolutely, man.
Yeah.
Absolutely. Get a lot of time to yourself to recharge. So this week, last week we talked about talking about we talked about dividend yields and so we'll go more in depth with dividends today
Yep.
and how important they can be to your portfolio and why they might be necessary for retirement. So let's get started, man.
Let's do it.
Uh so there's so let's just say dividends are payouts that companies pay investors for holding that stock. So, you get paid uh so whatever it is, monthly, quarterly, or annually for you buying that stock. And I guess that's like what that just something that they do just to because every company doesn't pay dividends, so it's like a
Correct.
reward or something.
Yeah, kind of like sharing back profits with with their investors. You got to think
Profit share.
if people didn't invest in it, you know what I mean, they wouldn't be able to generate that cash flow to, for expanding the business, things of that sort. So
Yeah,
it's a way to kind of just share back in some of the profits that a company makes. You know what I mean, just to again
yeah.
take care of your investors.
Okay. So talk about the uh the the benefit of uh investing in a company that gives dividends and a company that doesn't.
So I'll say this, and one of the examples I was talking about, I think I use today is, talking about AT&T. So
Hmm.
think about it like this: if you have a company, we'll just say it's paying out a 6% dividend yield, right?
Hmm.
So if you take all the dividends that they pay, we'll just say quarterly, right? So
Yep.
throughout the year, add those up, divide that by the current stock price, you'll get what's called the dividend yield. And when you get the dividend yield, it we'll just say something like 6%. You got to think that if the stock appreciates by 10% on the year,
Yeah.
add in that other 6% that they're paying you in dividends, well, you now earn 16%.
Right.
You know what I mean?
Yeah.
As opposed to you invest in another stock that doesn't pay a dividend, it grows. We'll just say the same thing, 10%. Well, you make
Hmm.
10% there. Both stocks made 10%, but this stock also paid a dividend, had a dividend yield of 6%. So now you're talking about, again, a 16% gain as opposed to a 10% gain. Now, just because it pays dividend doesn't necessarily mean that it's a great stock for everybody's portfolio.
Right.
But for some people looking, income investing, things of that sort, dividends, I mean, they pay well. Like I said, if you get to a point where you build your portfolio to a state where sometimes those dividends, you stop reinvesting them and you end up taking those checks quarterly. And
Yeah.
now, that's paying for some of your bills. You know what I mean? So I
Yeah.
told my dad, I said, man, no sense in reinvesting those dividends now. Dad, just take them. And, if it's, $1,700 a quarter, $1,800 a quarter, you're talking about
Yeah.
$600 a month. That could pay some bills.
Yes, it
You
will.
know what I mean? Or if nothing else, you know what I mean? $600 a month in cash that they're giving you,
Yeah.
if you don't need it. But
Yeah.
I highly encourage people my clients anyway, to reinvest those dividends, early
Yeah.
on and get going. Again,
Right.
it's just more free money that's being put back in to buy more shares, fractional shares for you, so that, again, that dividend is, if it continues to grow,
Yeah.
well, then your profitability on that trade also, continues to grow. So
Absolutely.
more
Absolutely.
shares, at the same dividend rate, man, it's just more money they're paying you.
Yeah, man. Uh that's how I've always looked at it, you know. Uh uh my dividend portfolio it was fat. I've divested a lot and I'm rebuilding it back up. But I highly believe in having a dividend portfolio and then a growth stock portfolio, having stocks in each one, you know.
For sure. All about diversifying, man. You got to be
Yeah,
diversified.
yeah. So the best of both worlds would be to have a growth stock that gives you a nice dividend. you know, and it's companies out there that are really good growth stocks that really offer nice dividends. So let's look at something that that they term, or let's look at two different types of dividends. Let's just say that. So there's a dividend where members of the S&P 500, you have to be a member of the S&P 500 companies, that where they raise their profits for 25 years straight.
An aristocrat, yeah.
That's a dividend aristocrat, absolutely.
Correct.
So these are companies that it's been proven over at least 25 years that they're going to increase their dividend the next year. And so you can bank on that. And so that's just money that you know will be there. So I have a couple of those, and you know, we can talk about them and what type of companies they are. I'm gonna give you guys five. IBM. I know you've heard of IBM.
Yeah.
A dividend aristocrat. 27 years and counting, raising their dividend. Let's, you know,
Another 3M, another one.
yeah, 3M is on there,
Yep.
absolutely. I want to give the amount of the dividend as it currently sits, but
For which
you know,
one?
for each one, you know,
Gotcha.
you got me.
What was the
Okay,
first one you said?
IBM.
Oh yeah, IBM. Duh. All right. You want to know their current dividend?
Yes.
So I got a yield of 4.71%, and it says their annual dividend payout $6.60.
And are they semi-annually or quarterly?
I believe they pay. Yeah, they pay quarterly.
Okay. So that's roughly $1.50, $1.70 a quarter.
Correct.
But they've increased it for 27 consecutive years. So I mean, I imagine the increases are you know, 2 cent, 3 cent, 4 cent, whatever. But uh that's a company that you know, you can look at and say, yeah, I know what they sell. People, they've been around this long. They'll continue to be around. And not only that, but they raise the dividend for every year. Yeah.
And they've done a good job of raising that dividend significantly on the year. So if you go back to dividend growth history, right, from 2015, they were paying about 4.78 a year.
Wow. Okay.
So up from there, you got $5.25, 5.64, 5.93 in 2018, right?
Yeah.
6.14 in 2019, 6.22 in 2020, 6.33 21, and 2022 they paid out $6.59, and going forward talking about 6.67. I mean,
Yeah.
it is raised. I mean, you're talking what,
Quite a bit.
11 cents, 12 cents, 14
Yeah.
cents, 30 cents. You know what I mean?
Yeah.
So
Yeah. So if you're uh interested in adding dividends to your portfolio, and you're looking at aristocrats, IBM is nice. Yeah, let's look at, so let's look at Next Era Energy. It's NEE.
NEE
Yes.
dividends. Let's look at it. So going forward, yeah, $1.70 is what they're going to be paying with
They've
a
been
yield of 2.02%.
okay.
So
So
again,
if you're looking at yield, the higher the yield, generally, you know, the higher the payout, unless of course it's a the stock price is less, you
right.
know.
Or if the stock starts to lose money, when you're like, oh no,
Yeah.
you know what I mean? That's why that yield goes up, because again, that's just the dividend per year divided by what the current share price is. So stock price starts to drop, yeah, it still has a high yield, but again,
Yeah.
is it worth
It's
that
not gonna.
6% if the
Yeah.
stock's losing 15, 18, 20%? You know what I mean?
Right.
So you're
Right.
limiting some of your losses there, but so just be careful. You know, we talk about yield and, oh man, this
Mhm.
thing's got an 8% yield. Well, look at how the stock has done also. You know what I mean?
Absolutely.
So, but
No,
they've
no,
grown significantly also, man. You're talking, 14 cents almost,
every
12
year
cents a
per
year
year.
that they've
Yeah.
kind of grown. Yep. 10
Dividend
cents a year.
Aristocrat.
Yep.
Next Era Energy, good. The next one, and I used to have this one called Caterpillar, CAT.
Oh, CAT. I own Caterpillar. Yeah.
Yeah,
Yeah.
yeah,
I like Caterpillar.
yeah, me too.
I mean, they're a dividend. Here we go. For the year. Let's look at it. They've got a pretty good scorecard, dividend scorecard, according to Seeking Alpha. That's something else, man. If anybody's looking for something,
Hmm.
we can go through and do some research and good articles and stuff, man. Seeking Alpha is one that I use personally. I'm
Okay,
not getting paid to promote them or anything like that.
for sure.
But I think they're running a special now. It's like $39 for the entire year. And that's normally like $300, $400 for the year.
Okay,
But you can get access to all the information that we're talking about right now, man. You get
yeah,
on Seeking Alpha and all that stuff is there.
that's
But
what's
they're
up.
going forward $4.80 with a 2.06 yield. But again, their dividend growth, again, if they're on that aristocrat list,
Yeah,
means they've grown. I mean, just let me see, from 2016 to 2016, 310 to 328, 378, 412, 428. Now it's 462 for this past year. And then what did I say earlier? 480?
yeah,
Yeah.
yeah,
So
yeah.
again,
Good. So that's the type of growth we're looking for. Uh, another and the list I had, it was 65 aristocrats. I think that's what it's up to now. And they take them off and add them on as they continue growth or not continue growth, right? So here's one other. So the research I did, it says that they just added this company to the Dividend Aristocrats, but it said it shows that they've increased their payout for 26 straight years.
what was
So I'm
that?
like, it's Church and Dwight, CHD.
CHD.
Yeah. So I'm like, they should have been an aristocrat last year. So do they
Hmm.
just, but it might have been miscommunicated, but so it might just be 25 years because it says they just added it to the list, but it said 26 year of growth.
That could be why. I mean, also you got companies that are falling off, like AT&T fell off of that list.
Yes, yes, they
And that
did.
was one of the ones. Well, the deal with AT&T was also because they spun off Time Warner.
Okay.
So people were, anybody that was expecting them to keep paying that same dividend that they were paying,
Yeah.
well, you can't expect that because they're getting rid of part of what makes them profitable. You know what I mean?
Yep.
So the profit, all that stuff is what they're able to pay dividends on. So naturally,
Right.
they cut the dividend, but they kept it in line to what it would have been. You know what I mean? So they kept the same
Right.
ratios in line, but they were removed, I think, February this year.
Okay.
And again, they spun off Time Warner, and
Yeah.
you know what I mean. So,
Yeah.
uh, it's
Good.
good. Again,
Yeah,
let me
and
just reiterate.
I own AT&T. It doesn't mean it's not a good stock. They're just not an aristocrat anymore.
Oh, now I'll tell you this, man. That's one that I've been researching and doing a bunch, man. I hold AT&T. My dad is an AT&T holder, man,
Yep.
and read a good article today. People worried about, oh man, the stock's been beaten down. With bad news comes buying opportunity sometimes, and I think that AT&T is one of those companies that's not going anywhere. You know what I
Absolutely.
mean?
Yep.
They're going to be around for a while. They
Yep.
pay a good dividend yield.
Yeah.
6% going
Yep.
forward will be 6%. So again,
Yep.
you make the stock makes 4% on the year.
Yeah.
Adding that 6% you have now because of the dividend, and now you've made 10%.
Yeah. So can you tell the people what Church and Dwight, what they do or what industry they're in?
So Church, yep, there we go. Church and Dwight Company.
CHD.
Yep. So the company profile here. So they develop and manufacture, market, household, personal care, specialty products.
Yeah.
So consumer domestic, consumer international, specialty products division.
Yeah.
So not to offend anybody, but they deal with stuff like cat litters, carpet deodorizer, laundry detergent, baking soda. So like under the Arm & Hammer brand.
Yeah, exactly.
Yeah.
Arm & Hammer.
And then again, not to gross anybody out, but Trojan brand, right? So they deal also with OxyClean and stuff like that, man. So they're similar to a company kind of like a GE or Johnson & Johnson, where they've got a bunch of items that they're into, right?
Yeah.
Like Procter & Gamble. Procter & Gamble is another one, man, that people don't realize this is something they probably offer something like 3, 4, 5, 600 different products that they people wouldn't even think like, man, that falls under Procter & Gamble.
we're about to see. We're about to get into those because they fall under something a little different. The same, but
Mm-hmm.
more exclusive, right?
Yep.
So let's talk about it.
Yes, sir.
Uh, so the next type of dividend that we're going to talk about are dividend kings, right? So you have aristocrats, which seem like they're higher than, I don't know, aristocrat and a king. I guess a king is higher than an aristocrat.
Well, they're like, hey, he's an aristocrat. Okay, cool. Yeah, you know what I mean. You're a distinguished person, but
Yeah, but you're not a
kings are the
king.
ones that dominate, right? Kings are the ones that rule it
Absolutely.
all, right?
Absolutely. So we're talking about dividend kings. Now, the difference just off the definition is that you don't need to be a part of the S&P 500 to be a king, but you do to be an aristocrat. Okay. So dividend kings, not necessarily part of the S&P 500, but they are companies that pay out for 50 years consecutively.
That's dude. That's 5 decades, man. It's half a century.
Crate of increased payouts.
Right? When you put it in terms like that, right? It's a half a century.
Man,
Long time, man. Yeah,
yeah,
yeah.
like generations. So again, the list was extensive. I chose 5 that we're going to talk about. So the first one is PG, Procter and Gamble.
Love Procter and Gamble, man. I
Yeah,
mean, just again, a company that makes a little bit of everything.
yeah,
I say a little bit of everything. I mean, they've got a bunch of
a bunch of
you know,
practical, necessary stuff.
product and things that you probably wouldn't even realize are like, oh man, I had no idea that those guys made that. You know what I mean?
Yep,
Like they make
yep,
that product. Oh, they make that product. They make this product. Yeah, man.
yep.
These companies. So let's see. Feminine care, home fabric, healthcare, styling aids. So here you go. Head and Shoulders, Herbal Essence,
Yeah,
Oil of
yeah.
Olay, Old Spice. I mean,
Oh,
Venus, Gillette. Yeah, man. There's a
yeah,
bunch of diapers. You know what I mean? Febreze,
yep.
Mr. Clean, Swiffer brand. So they make a little bit of everything. Now, when it comes to their dividends,
Yeah.
again, 50 years being considered a dividend king.
Hmm.
50 years is a long time. And I mean, their forward payout going into this year in 23 is supposed to be $3.65 with a 2.43% dividend yield, which
So that to me that seems low to be increasing it for 50 years. But what do the numbers say? Like just give us the last 5 years maybe.
last 5 years. So here we go. I'll start 2018, 284, 295, 311, 340, 361. So,
Okay. So you
I mean,
can,
you look at also their growth year over year, right? Their annual payout growth, man.
yeah,
It's,
yeah.
I mean, going back again, 2018. So 3.75, 4%, 5.5%, 9% in 2021, 6.16%. So,
Wow.
the mere fact that they're paying out. Now, sometimes
Yeah.
their yield, the yield's going to fluctuate, obviously with
Yep.
stock price and everything, but
Yep.
it's about compounded growth, compounded annual growth, man.
Yeah,
That's
man.
significant. You know what I mean?
Absolutely. And what's so uh what's impressive about the aristocrats and the kings is that they've done all of this through a pandemic. Do you know how many companies stopped paying dividends during the pandemic?
Think about what 50 years, man. You're going back. What are we in 2022? So you're looking what
A lot of
Vietnam,
pandemics,
right?
right? A
Since
lot of
Vietnam,
different
right?
things.
I
Yeah,
mean, it's
past
a
Vietnam,
long time, man. It's been through wars, been through Desert
wars,
Storm, been through, and
and
still paying it out, man. That's
still making enough money, cash on hand to pay investors dividends.
dude. They have a payout ratio of 61.81%. So if everyone doesn't know what their dividend payout ratio is, so you think about the total amount of dividends they pay to shareholders
Mhm.
compared to how much money they bring in, net income that the company's going to generate. So 61% of the net income that company generates, they're giving, they're giving back to investors,
So
to shareholders.
let's put it in layman's terms. If they made $100 million,
Yep.
right? That's an easy number. They're paying out $61 million of that, and then the company keeps the 39 million, for, to grow the company.
Yep.
That's simple, and
Now, yeah, that's in very simple terms. Now, and you get into some of the accounting stuff. I'm sure there's so much. I'm not trying to dumb down it. I mean, so much more that goes into that stuff. But
uh,
just by pure definition, you talk about a dividend payout ratio, right? They're going to look at how much, right, total amount that dividends that are paid to shareholders
yeah,
They're going to do that in relation to how much net income that the company generates.
Yeah. Yeah.
So, again,
That
companies that are taking care of the people that are, helping them to get where they are as a company.
absolutely. Let's look at the second company, and you mentioned it, 3M.
Yeah.
MMM.
Extremely beaten down. I'll tell you this: I am a 3M holder. I
Okay.
do. They pay. I mean, look, $5.96 is what it's about to be with almost 5% yield. I think this past year they finished out with I want to say 6% yield, almost give or take.
I like
So the
that.
4-year average on the dividend yield has been about 3.5%.
How much is this stock right now?
Stock is 121.69, and like when I tell you guys, beaten up. I mean, it has taken a punishment. Again, they've had the lawsuits. You know what I mean? They had thing with with COVID, and they had to deal with
So what was the 52-week high, if that's available?
the 52-week high for
3M, yes.
3M. Our 52-week high. Let's see, 5 years ago. That's dividends. There it is, 52-week range. So the high 181.78, and the low of 107.
Okay.
Yeah, so it is taking a little bit of a beat, man.
Yeah.
There's no doubt about that.
But and they're still paying out.
And they're still paying out, and they're still considered a king.
Yes, that's very impressive.
Yeah, because I mean, I for one am a holder. My children are shareholders in 3M. And it's one of those, like I said, I mean, $6 a year that they're going to pay out per, per share.
Per share, yeah.
And we just keep reinvesting those deals. So I mean, again, with a price that expensive, with $120, and say you got 20 shares, right? That's $6 a piece. That's an extra share a year that you're buying. Well, you're buying that the company's basically putting back into your account for you.
Right. And affordability is relative, but $120 for a share, I think for a regular person might be affordable. If you want 10 shares, it's $1,200, and that's a good place to start. Because 10 shares will get you, what is it, $6 a year, $60 for the year.
That's another half a share.
That's another half a share, which will get you another $3. It just keeps compounding. That's what's up,
man. And they've met or exceeded. I mean, earnings estimates 1, 2, 3, 4, 5, 6, 7, 8. The 9 last consecutive quarters, where they've had earnings beats.
Yeah. Wow.
So, but again, they've also been dealing with lawsuits.
Okay.
So that's one of the deals that they're having to combat.
And
I think that eventually, they come
talked.
out of that stuff.
I think we may have talked about 3M last week. So what's the number one staple that they produce?
Number one that 3M produces, Post-it notes, baby.
Yeah, baby.
You know what I mean?
I say sticky notes.
Love Post-its, man.
You say Post-it notes. I say sticky notes.
Sticky notes, yeah. That's Post-it, man. But again, another company that manufactures a bunch of different brands.
Love sticky notes.
Just spun off, part of their healthcare part.
Yep.
That they were doing, and they spun that off. It actually gave shareholders the opportunity to, do you want to be able to buy in and be able to convert shares? And I mean, I chose just look, I like 3M. I know 3M, so I'm sticking with what 3M does as a whole.
Yeah, absolutely. Let's look at the next company, which you also mentioned, Johnson & Johnson.
Love J&J.
Yeah.
Love
Dividend King.
Man. Again, yes, a Dividend King. So, I mean, I got to explain about Johnson & Johnson. You guys know what they make and some of the things that that they're into. But as far as their dividends, man, I mean, here's one deal about their dividend grades. All right, again, this is according to Seeking Alpha. All right, so dividend safety, they got a B minus, A plus in dividend growth, a B plus in dividend yield, and an A plus in dividend consistency.
Wow.
Right, so their yield isn't huge, right? 2.5%, 2.57.
Yeah.
But annual payout $4.52 a year.
Got to have J&J in your portfolio.
Look, their dividend growth rate, man, over the last 5 years, their growth rate, I mean, they've grown at 6%.
Wow.
And here you go there. Dividend growth over the last 60 years, J&J.
Wow. Wow. Yeah.
You got to be 50 to be on the list.
Yeah, but you can be more than 50.
And they're 60.
And they're 60.
60. Hell, look, I'll go back to Procter & Gamble. Procter & Gamble. Oh, no, I'm sorry. This is 3M. 3M, 64 years.
64 years straight.
I was on 3M.
Yeah. So I don't know what they. I don't think there's anything above a king. If you do 100,
No,
you're a double
Procter
king.
Procter and Gamble, 66 years, man. So that goes to show you that
Yeah.
these companies have been around, and while some of the prices have been kind of beaten up,
Yep.
again, with obviously things going on in the country, I mean, global economy slowing down, things of that
Yeah.
sort.
Yeah.
But these are companies that have been around,
Right.
and they've been growing their dividend the entire time. It means they're growing the company. So it's
Yeah.
not somebody that I think is like oh, stop investing in 3M. Well, I'm not going to. For one, I mean, this is a personal belief. They've been around forever, and I don't see them going anywhere anytime soon. You know
At
what I mean?
all. Yep.
It's a company I believe in.
Yep.
I've used the products, and like again, numbers. The track record speaks for itself.
Right. Now let's look at another one. KO. You know what that
Coca-Cola,
is?
baby.
Yep.
Yes, sir.
Coca-Cola.
No more 60 years dividend growth, man.
60 again. Wow.
Yeah. So
Wow.
dividend yield 2.8%. Annually, they don't pay out much annually, $1.76. But a positive note on that is also again 60 years straight.
Yeah.
And they've grown that dividend growth rate over the last 5 years at about 3.5% on average.
Yeah.
And their payout ratio is 70%.
70%. 70% of their earnings they give back to you guys if you own a share. That's wild. And who owns Coca-Cola?
Me. Excuse
No, I
me.
meant
Shares of Coca-Cola. I own shares of Coca-Cola. I don't own Coca-Cola.
yeah, yeah. So Warren Buffett, his company owns Coca-Cola.
Oh, surprise, surprise.
Yeah, yeah. Warren Buffett's company owns Coca-Cola. Now, a quick story on that, and he may have sold it by now, to be honest. I mean, he owned it last time I checked. But companies be moving in and out of Berkshire, so much. But quick story, uh, he bought Coca-Cola for whatever he bought it for, and the Cokes were, $1.99, whatever. He increased the cost a penny, and so they were selling so many Cokes, it made him so much more money just by increasing the cost a penny.
That's a global company too. You know what I mean?
Yeah.
Coke sold everywhere, man.
Yeah, yeah. So that was his bright idea, and it didn't really cost the consumer anything at all, and it made the company so much more money. Yeah, I just read that somewhere, but yeah, what's Coca-Cola's growth rate looking like?
So growth rate again, 3.53% is their average 5-year growth rate.
Okay.
I'll tell you what the actual numbers are here. Let's see here. All right. So for the last since 2017, $1.48, $1.56, $1.60, $1.64, $1.68.
So 4 cents a year.
I mean, yeah. Again, it's four more pennies a year, man.
Hey,
something that again, something being affordable is always relative. But I mean, at
yeah.
$62.75. Again, with the possibility of a recession hitting, people
Right.
still gonna drink their Coca-Cola.
Yeah. Yeah.
You know what I mean?
And you're gonna know that an increase is gonna come the next year. So
60 years straight they've done
you
it.
can bank on it.
That's it.
You can take that 4 cents to the bank.
That's a brand name, right?
Yes.
Like Pepsi, that's a brand name. They
Yeah.
stand behind it. I guarantee it.
Now this last Dividend King, I was shocked. I mean, I guess I was shocked. I was surprised, definitely, but maybe I was even shocked because I didn't even know this company had been around 50 years. But Target, bro, Target's a Dividend King.
Target is a dividend king. And the crazy thing is that again, they fall under like consumer goods and everything, but you're talking 51 years that Target's been
Wow.
doing it.
Did I even know of Target when I was growing up?
I know
I don't think I
know
did.
we weren't shopping at no dang Target when I was growing up.
Not at all.
Like Kmart and Zayres
Yeah.
and Ames and
Wieners.
yeah,
I
man.
don't know if you know Wieners. That was a country
Man.
store.
Dividends. Here we go. 54-year dividend growth. Oh man, on average, Target last 5 years growth rate 10.17%. Annually,
Nice.
they pay out $4.32 with almost a 3% yield.
Nice.
So, yeah,
nice.
man.
Target is another one that you should have in your portfolio. I remember now, and I missed on Target. I saw Target at like $80, and this might have been a couple of years ago. And then like a week later, it was at $140. I was like, what happened? I
So
was like,
March
I missed
of
that trade.
Yeah, March, April, it was down, we'll say almost at the $90 range. And then
Hmm.
before that, you're looking, we'll see the next major low, December of 2018, where it was at like $60 a share.
Yeah,
And that
yeah,
thing ran to a high of almost $270 a share.
yeah, man. It sure did.
That's a lot of growth, man. I mean, look, man,
Yeah.
that's $200 a share,
So
$200 per share.
200 per share. And where's it sitting at right now?
Right now is 146.45.
Okay. Okay.
So even still, you're still looking, even if you still held on to, you didn't sell out at the top. I mean, you still hold on to it. You're
Yeah.
still up $80 a
Still
share.
up, and
You know what I mean?
and
So
it's still good value right now.
yeah, so
You know.
we'll say if you got it in at 60 and you bought 100 shares, right? Cost you
So
6 grand.
so we've got about 5 minutes left, brother, because I'm not gonna keep you here all day on your day off.
I was
But
there. I wasn't know about a day off, man. I was at a swim meet this morning. I had to be at one, man. So
but
definitely no day off.
let's talk about, let me get your opinion. So
Yeah,
give me one of the five aristocrats that I mentioned that you might consider a growth stock. So growth plus dividend, and then give me one of the kings that you might consider a growth plus dividend. That
man.
might
So
be
when you
really,
look at some of that stuff, man, I mean
yeah,
the list is pretty big. But
yeah, man.
you know, I don't even. You know what? Let me see if they're even on here. I don't think they are, but we'll find out. Let's see if
Okay.
you said see anything about Microsoft. I don't think that they're
No, I
aristocrat
didn't.
or
Yeah, I didn't see Microsoft.
no. Microsoft went on there. So all right, let's look at the aristocrats. Let's see here. It might be a growth stock, man. It's tough because you have companies that right now with everything being beaten up with the way the market has been.
Yeah.
I'm more seeing more like some of these things are daggone value stocks. You know what I mean?
Yeah, me too. Me too, man.
So, but let's see. Caterpillar maybe.
Yeah. Okay. Let's go
Maybe.
with it, man.
I like their growth rates, right? So
Uh-huh.
year over year growth, the way they've been growing.
So give me 5 year low and high. Can you
The
do that?
5 year low and high.
Yeah.
So Caterpillar, I'm gonna go back 5 years. 5 years puts us at what, 2017, give or
Yeah.
take.
Yeah.
So I'll go December of 17. There we go. So December of 17, looking at about um here, I'll just give it to you what it was at in 2017.
Okay.
About $152 a share,
Okay.
give or take.
Yep.
December of 20, and now it's at 232. So
Okay,
figures
good.
growing about $100 a share in 5 years.
Yeah. That's about $20 a year,
Yeah,
you
and
know?
that doesn't even include that the dividend they paying, because you got to keep that in mind also.
Exactly.
You know what I
Exactly.
mean?
Yep.
So over 5 years, your dividend, and then whatever you also earn, and I mean, excuse me, 5 years and just in appreciation and the value
Yeah.
of the stock
Yeah.
on top of what you've been paid in dividends, man. So
That's very important to know. Like, if you don't lose money on a dividend stock, then you're winning twice. You know what I'm saying? You're
yeah,
double dipping.
yeah, it's like a retiree hire, man, double
Yeah,
dip. Yeah.
absolutely.
So I mean, something
You
like
know?
Caterpillar. Again, I don't know for sure that these would be considered actual growth stocks, but I
Right.
mean, the last
Right.
5 years, damn thing grew pretty much for me. At $100 a share, that seemed like enough growth for me.
Yeah,
You know what I
absolutely.
mean?
So so that's almost it's all, like I said, it's almost 100%. What would that be? Maybe 80% growth? Went from
I mean,
150
it's growing
to
$100,
80. Yeah. And it was at
100 bucks.
150. Yeah. So that
It was at
maybe
150.
75%, something like that. Yeah, yeah.
I
That's
mean,
just
that's
my quick math. Now, Dividend King. Let's look at so I would think that uh Target is growth stock. Let's look at the 5 year run of Target.
let's see here. So Target again was as high as almost 270.
Mhm.
And let's go back to December of 17. Let's see, so about $64,
Wow.
$65 a share.
So it
up to a
increased.
high. All right. I mean, so that's going up to a high of almost,
Yeah.
I mean, $200 plus that you would
Yeah.
have made per share
Yeah.
at the peak, right? If we go based off of today's prices, you're looking at, $146.
Just double still.
Nonetheless, again,
Yeah.
on top of what they pay as far as dividends, you know what I mean?
Yeah. Yeah, man. So these are the type of thing we want you guys to look at, and when you're building a dividend portfolio. You know, the not only the dividend but the yield, uh you know, the price of it, whether it's grown in whatever period of time you're looking at, 5, 10 years, whatever, because you can really make some solid income on those type of stocks. And so if you hold them long term, they can be really good retirement plans. And you know that's just some friendly.
Again, and not only that, but just another way to diversify, man.
Yeah.
And why not add a little more money if they're going to pay you for investing in it and it's a solid company?
Yeah.
Why not take the free money?
Absolutely.
That's like not taking advantage of the 401k. Somebody's gonna match you dollar for dollar the first 6%. It's giving you money. So for every 100 I put in, y'all gonna put in 100? Oh,
yeah.
Man, that's a wrap.
So we're gonna grow you $20 to $30 a year, because it's been done over time. Plus, we're gonna give you a $3 to $6 dividend a year on each stock that you own.
For every share that you own, man.
Yeah.
I mean, you'd be a fool not to take advantage of it. I told my wife. My wife took a job. She got out of the corporate world, took a job with Harris County. Harris County, their pension is unbelievable. Them jokers are, look, January 1st, they're matching 225% of whatever you put in.
Wow.
I said, baby, you need to stay there at least 8 years. You're fully vested after 8. I don't care what you do after that. Retire, whatever you want. So I need 8 years. 225%, man, you gotta load that thing up. Whatever you put in, they're gonna match 225%. Let's do it.
Hey,
absolutely. Can I put some in? Let me put some in.
Can spouses add to that? Absolutely.
You know what I mean?
Great job, man. So we are running out of time, man. But this has been a dividend segment. We've talked about dividend aristocrats, dividend kings. Aristocrats pay out. They've paid out increased payouts for 25 straight years. Kings have increased their dividend payouts for 50 straight years. We've given you guys some examples and some real stocks that you guys can take advantage of if you choose, or do more research on your own.
Yes, please do your due diligence, man. Hey, one thing before we cut off, I know we're out of time. The question is posted on the EightOne Capital Facebook group. So if you log on there, man, I'm giving away an autograph mini helmet from an NFL Hall of Famer. And I got another special gift that's perfect for the cold weather, man. It's got the logo on and everything. So all I got to do is post a reply in the form of a gift to the question. Spin it at random, shutting everything down, shutting down responses on the 19th. So anybody wants in, it costs you nothing, man. Like the page, join. It's nothing but information I put out. So
yes, sir.
Again, it costs you nothing. Post a damn picture and and got a chance to win.
Appreciate you, Eddie.
Man, appreciate you too, brother. It's always fun doing this, man.
Yes, sir. EightOne Capital in the building.
In the building early.